Hey everybody, this is Grateful Futures here on this episode of our Trading University. We're going to be going over, in my opinion, the two most important topics in all of trading and volume profile. The first thing we're going to talk about is how to use volume profile in context with market structure to identify which way the market is most probably heading. And then the other thing I want to talk about briefly is to understand the elements that you're looking at for entry. Use those to understand how long we should be holding the trades for and what our target should be after we've entered the trade. So what we're looking at on the screen here is today's S&P 500 SPY. You guys know I'm a options trader. I love options, specifically the S&P 500. But this is applicable to any chart you can go through. Now, just to give you guys a breakdown, if you haven't seen my previous videos, definitely recommend to go look at those, the basics videos, as well as the others, just to give you a rundown if you're new here. On the left side of my screen, this kind of teal and pink volume profile, that is a long-term volume profile of all the volume all the way since back in March, and it's September right now since the last major bear market and recovery. What it's on the right, this green and red volume profile over here, this is the sessions volume profile anchored from pre-market. So this is just the volume of just today. This is long-term volume as a whole. Now, what happened early in the morning is during pre-market, we had some support off of this volume peak right here, this long-term volume area. And we had been kind of going through a pretty steep downtrend for maybe 3 or 4 days. So we were eventually looking for this to slow down. Yesterday, the price came down all the way to this pretty much critical low volume node, and then it recovered. And we opened the day with price bouncing on this, what we call point of control, or the heaviest volume price level, the heaviest volume at that price level of a given peak. This one kind of has two of them, so I marked both of those. Those are the dotted white lines. Now, if I'm looking in pre-market, that's a level that I know is probably going to be pretty important throughout the day. So I just keep that in mind. But we drifted up into open. Here's the 9:30 open right here, where it goes from a light color to kind of a darker color. Price immediately spiked up heavily. It came into trying to get into this volume area up here and then failed pretty drastically. I didn't really take a trade off of this. I mean, you could have maybe if you took a fixed range volume profile, taken this support of this point of control, but this is just kind of way too fast for me, generally speaking, to go in a trade with a full position. So instead, I usually like to sit out for a minute. Knowing that we were pretty oversold at the time, I was hoping to find some kind of bottom support of the day, and seeing that this was a level right here, roughly about 657.92, that it had been supported at in pre-market. I was kind of hoping to see price get there and recover. If it breaks that, then that's fine. It's probably just going to be a bearish continuation, but it can only go so far, especially in a pretty strong bull market. So anyways, price pops up into this volume area. It really comes down hard and tips off of this critical point of control in this volume node right here. So after I saw this, I was starting to look, maybe we should look at some kind of bullish action. And the first point I want to make is, with volume profile, the entries are either going to be at a point of control or they're going to be at a low volume node. Low volume nodes are kind of your traditional pivot points, your support and resistance, whereas point of controls, these act as retest points where price leaves that, it'll come back to test it. And if there are no more sellers at that price range where there previously, this was a heavy point of volume for both buyers and sellers, then, if price comes out of that, then that's also considered kind of like a reversal entry. But what you want to do is look for price to hit one of those points, and the lower the low volume node or the higher the point of control, the more significant. Once price tests that, you want to look for, price to go, if you're looking for a reversal, like in this case, you want price to make a higher low. You want it to test it, but you don't know for sure if it's going to break through yet. The proof that it's not going to break through is if price makes a higher low and starts coming out of it. So about right here at 1036, that's when you know that this is, most likely is not going to break through this. This is a support. It's the combination of having price test that critical level and then make, if you're looking for a bullish trade, a higher low. If you're looking for a bearish trade, a lower high. And this doesn't have to be a reversal trade. For example, right here, I actually did take this with a small position. Price comes down really, really fast. I saw there's a couple low volume nodes here. Price broke through this low volume node. It came to retest it, and then you can see sellers are bringing price back down. So this is a breakthrough of one of those levels and a retest, but I know that price is, making a lower high coming from up here, quite a bit lower high, to down here, and then sellers start to take over again. I know that is a guaranteed lower high at a low volume node. Price is probably gonna kind of continue through that. So same thing for this trade down here. This is a reversal trade where price is coming to test that critical point of control, which was also a pre-market level that we were watching. Price made a higher low right on a low volume node as well. What that tells me is that for the moment, sellers are done transacting in this volume range. So for the moment, there's not sellers that are available in this volume peak because price tested the point of control and made a higher low out of this volume zone onto its low volume node. This is a trade you could take long. Let's go ahead and put our long position. Once you see that breaking up, you could take that long. You could put the stop loss if you want below there or below the recent low. And what should be your target, right? Your target should be either a point of control or a low volume node. You could take profits if you want at these low volume nodes along the way. But this is our next major volume zone up, right? So this is where, sellers probably will get back involved here because they haven't proved that they're done in that price range. So I'm just going to mark it off with a box here. So in this volume zone, we have no idea if sellers are going to give up, if they're going to come back into the market. Clearly, this previous downtrend here, they were pretty involved. So you don't want to take this trade longer than either the low volume node that would be entering that volume zone or the point of control. So I would take this trade probably to this low volume node or right under it, because you don't know if sellers are going to come back there. And that's already, even with that stop loss, that's a 1 to 2.6 trade risk reward. So that's very, very good trade. Again, and just like I said, we don't know if sellers are going to become active here again. They obviously do. They bring the price back down. And you could use the same kind of logic if you want. Technically, that is a lower high versus this recent pivot point back here. So from here, bring that over here so you guys can see, to here, this is also technically a lower high. So we have on the session, a bearish market structure, and prices testing to see if there's any buyers in this price range, this box that we drew here. Sellers push it down. Buyers try to push it back up into that price range, and they fail right at the low volume node that separates that high volume zone from the rest of this low volume and the price below it. So that move kind of proves that for the moment, there's no buyers left in this price range. So if you want, you could even take this trade short if you're a scalper. I didn't take this trade, but you could take this trade and put the stop above the recent high and target, maybe that same low volume node that we used for support before, because same thing, you don't want to guess that there's no buyers left in this zone because they just proved that they were. So that's another trade you could have taken for 1 to 2.6, about the same, pretty darn profitable trade there. But the best trades, so this one, talking about time frame now, um, you're looking at, this, you really got to let it develop and see. So you never really know. You can only kind of guesstimate. But once this comes here and you start to see this range a little bit, then instead of looking at this as the previous high, you should start looking within the consolidation range. So if you see it consolidating until it breaks out of this consolidation range, roughly, let's just draw a line here, roughly here, roughly here, maybe make that a solid line so you guys don't get confused. And here, where it was supported down here, you guys should be taking your trades only within the known range, right? So now if I see it ranging, which is about right here, I know that it's within this range, then you should only consider trades that are within this zone. Now, let's just kind of look through some of these to see if we can make some, assessments about what are some trades we could use based on volume profile. Also, I do want to say for our session volume profile, and I always do this, I always draw out a box on the low volume nodes. So just like I put these orange lines here for my long-term low volume nodes, and I do the dotted line for my point of control long-term, for my session low volume nodes, I'll put a kind of like pretty much this box right here, kind of like a lighter box. And we could also do this bottom. Technically, this is a low volume node as well. We know that's some support there. Um, so you don't want to be holding a trade longer than, into this box. If you want to leave like one runner, that's fine, but you should be out of a majority of your trade at this box when price meets it if you're going long, and you should be out of a majority of your trade if you're short when price comes into this known support and resistances. Now, let's just go ahead and run through this real quick. So, right, we see that it's made a lower high from here to here. We see it's made a lower low from here to here. Now, when price comes down here, that technically is a higher low, right? This one right here versus this one right here. And, because of the sell-off, we're kind of already, we're higher than we were yesterday. We're kind of looking for buyers to step in at some point. Price does come and make another low right here, which is technically still lower than this low, but overall throughout the session, this is stepping up technically, right, from the low of day. So we have a lower low, a higher low. It's kind of like word jumble at this point. But now we have a higher high versus from here to here. Let's make that a different color. Maybe blue. So we have a higher high. So now we've made a higher low, a higher high. This is the start of building support, right? So price has reached up here. There's no buyers. It came crashing down. And now we've start to found some buyers in this range. Certainly buyers are supporting price from going further into this volume area. Now, what happens here is price comes down again, makes a higher low right here versus the previous and versus the lowest of the day. So this is building, right? Buyers are starting to take over. Unless sellers can push the price down past this known support and retest it to go further down, buyers are actively taking over the price action. I know it looks crazy bearish. Some people say that's a bear flag. That's the biggest mistake some traders make, is to just short into this support zone. I know you want to carry the momentum. You're thinking, what if it keeps going? You might be getting some FOMO. That is the biggest mistake that any trader can make, is just going short right here, going short right here, going short right here, going long right here, going long right here, because um, those are active supports. You want to let price prove to you that it is truly going on a continuation. Otherwise, you have to assume that the session volume profile, what the price has showed you from the long-term volume profile, you have to assume that's going to be accurate until you see this. And just for accuracy, let's make it red. Until you see that, assume either this or this is going to happen. So assume that is going to happen until price proves you otherwise, because it already has started showing that buyers are starting to take over the price action. And let's go ahead and just kind of annotate this chart as we do this replay and see if we can see what's happening. Can we pick out some trades based on the volume profiles, either the session, long term, or some fixed ranges throughout the day? So price makes that higher low, comes up, settles on that low volume node right here. This is also a higher low. This is also a valid trade. You could have taken this one long right here, take it up to, right below maybe the previous high right there, stop loss right below that low volume node. That would have worked. Now, when price gets up here, it does make that higher high, but sellers start to take over. They push it down. It's supported a little bit on this low volume node right here. But ultimately, we could even say this in terms of volume profile. We draw a fixed range volume profile on just this section of the uptrend. Our point of control is this white line right here. You can see that price is struggling to get over that. So that's telling me price is probably going to fall back down, but because there's higher lows, higher highs, I'm not going to short this because I'm going against the trend. Now, price falls down here. It's supported at this low volume node, which is kind of a critical low volume node that separates these two peaks. It's also close to the middle of this volume profile, so I'm not too excited about taking a trade right there, but nothing's perfect. You can see price comes up a little bit. That's a higher low. I actually took this trade today and I got stopped out when price dropped back down right here on this candle. That's okay. More often than not, you will win if you just assume the price action and the market structure is valid with what you're looking at in terms of the volume profile. Price searches down a little bit more, comes to this low volume node, and it's supported a bit. And now you can see it's starting to support on this right on that low volume node. Let's go ahead and play this replay. We can start to have some new candles in there. So perfect. Price pushes up out of that. And you could take this one too. If you did that, you would see that price makes that a higher low right here. And then you can wait for it to make another higher low right there. You could take this trade like this, long. Still not super excited about trading near the point of control of the session, but this could also work, taking it up close to that top of that range right there. I'm actually not going to do that, even though it would have worked out. I want to show you guys what would be my preferred trade, but you could take that as well. Remember that the point of control, either the session point of control or the long-term point of control, if you're actively developing in that range, it has the highest probability to chop or reverse, because that is the price at which buyers and sellers are most active. Now, we could also draw out a box here for this session. There's a little bit of a low volume node right here. Now, if price began to support on top of that, it would be moving away from the point of control. That's also a probable trade. We can also take this and say this recent downtrend, the fixed range volume profile. Let's draw a line for that point of control. And since it's a point of control, I make it a dotted line. So if price supports here, gets through that, that's a pretty clear sign that we're at least going to test the top of the range. So let's see what happens. Price starts to break through it. It gives a little bit of support on this low volume node, just like I was talking about. And you can see it's starting to make hammer candles, right? So that's clear indication that sellers are trying to push this down. Sellers are trying to push this down and buyers are buying it up. This is my custom volume, buy and sell volume EMAs. You can even see that buyers are starting to step in and sellers are starting to fall off. That would be my ideal trade right there. So if this low volume node right here is acting as support, price is starting to push up out of there. We're making higher lows. It's starting to break this downtrend point of control. This is a trade I would definitely like to take. And we can just kind of let's put a long trade right there. We can put our stop loss maybe below the point of control on the session, below that low volume node. And let's take it up to before that session low volume node. It's also the long-term point of control. So that's why this level has been pretty stiff to get through, is because that session, it has a low volume node there. Long term, that's also a very active zone and it's already been rejecting off of there. So let's go ahead and take that trade long. Price immediately rips up out of there. So that, that's great. We're using our market structure plus our volume profile factors to get in that trade right at the right time. And now at this point, right, most people, novices, are taking a long trade right there when they see that price start to spike up. Again, don't do that. Know in the context of this consolidation that you should be in this trade when you see immediately those higher lows forming and when it's broken the previous downtrend. That's the ideal moment to take this trade where you have the highest probability of it moving to the top of the consolidation and the lowest probability of it crashing through that because you've seen that there is some support there. Now let's just keep pressing on here. Now at this point, we are fully at the session low volume node. We are fully at the long-term point of control. You should be out of any kind of long trade at this point. To continue, I'm not saying you can't continue, or if you want to leave a runner, like I said before, you can, but to re-enter this trade, because this is the highest probability that, again, it might reject. We want to see this happen, right? We want to see support on that low volume node, support on that point of control. We want to see it leave above it, come back and test it, and it confirmed as support. Just like to continue down, we want to see it test what was previous support, those low volume nodes and point of controls. To go down further, we want to see that happen. To go up further, we want to see the opposite, that to happen at the top. So that's pretty much what I'm looking for at this point to see if we can get out of this consolidation. Price breaks up, tries to come into this volume zone, the top of this long-term volume zone. And remember, keep in mind that long term is a little bit more important than the session, as long as the session or the market structure is confirming the long term volume profile. So definitely be a little cautious to if you get back into a trade, and I'll show you where to get back into it. Draw out these low volume nodes and make sure that you're only taking the trade until it's giving you some resistance at one of these key levels. So that's a low volume node for the session. We know we're probably going to get some resistance there. And then we can start to draw paths, right? So if this happens, I could take this trade long and I'm going to stay in the trade if this happens. So as long as it's climbing up there, if we start to have price, you're probably going to take some profits at this low volume node right here. And if I see this happen, I'm probably going to be all out. I'm going to protect those gains, protect the capital. And let's see what happens. Let's see if we can make a kind of commitment on where we're going to enter this trade if it happens. So price comes back to try to test that point of control and low volume node right there. We don't immediately hop in the trade, right? Because we don't know if this is going to crash back into our consolidation zone. But if we wait, that's a good candle right there. That's a healthy candle. I'd like to have it be a little more like symmetrical. Maybe if we can get like a double test, you can take this as long as your stop loss is underneath this low volume node. So price is coming back down. Now, if price comes back up out of this, okay, this would be my ideal entry here. So we're making a new higher low. We're making a new higher high. Price has shown that it has just broken out of this consolidation range that it was in. And now it's retesting what was previously resistance, which is doubly good because it's a session low volume node and a long-term point of control. So I would go ahead and take this trade long. Let's say let's get in at the current price there. Stop loss under recent lows, under this low volume node, the point of control, and we're going to initially target this low volume node right here. And by this time, this is pretty much guaranteed. Of course, nothing's guaranteed, but this is such a high probability trade. It's squeezing up. There's, inside of this run up, there's higher lows, starting to be now, equal highs, but these lows are pushing up. Sellers are losing, buyers are taking over, and that's ideal to stay in the trade. I definitely think that this is going to come up and at least hit this low volume node. And let's see if we can just draw maybe a fixed range volume profile to see if we can see any more confluences. Let's draw it from this recent low to, let's just draw the whole thing. Let's see the whole thing. Oh, it's doing this weird thing where it's not letting me on the replay. That's strange. Okay, well, not super important. We've seen enough of our confluences there. Let's go ahead and keep playing it. Boom, we have something else, right? The point of control for the session has shifted from the low of the day to above this consolidation range higher. That's always good news, right? If this price were to just rip up and it still have the chunk of the volume of the day down here, I'd be a little worried. I'd probably exit the trade, but because it's posting additional volume up higher, that's additional confluence to stay in the trade as well. And honestly, I'd probably be out of this trade before that low volume node just in case it does reverse. But that's another great trade you can take using our volume profile tactics and market structure. So price pops up again. Let's see if it retests right there. And a double retest, point of control shifts again up. So, massive volumes coming into this move up. Point of control shifted from here to here to here. Now, this is, the ultimate target here could be the high of day or at least this major long-term low volume node. And because you've probably taken one trade here, I would definitely get out of this. But because you've seen it break out of the range now, it's retested it. When you enter, I would say you could leave maybe half of your position to try to see if eventually price is going to get up here. Now, I have a longer term mindset because I'm not within this consolidation range. We're looking at the whole session now. So, you could move your entire position to be maybe right below this low volume node long term. I always like to play it a little safe. And if you took this trade, you would have gotten pretty heavy, pretty heavy win. All of these trades are over 1 to 2. This one's 1 to 1.83, but it was four great trades based on volume profile that were all over 1 to 1.5 risk to reward. So definitely something you guys should consider, but that's the basic thing, right? A lot of people will see this top here, they'll see the big move down and they'll try to short into the bottom. Don't do that. You understand market structure now. You understand that your supports are these low volume nodes here, which is a little hard to see in traditional like support and resistance. So you see those higher lows, the higher highs. You understand that more likely than not, buyers are taking this over and they're at least going to push to the top of this consolidation range. They end up doing much more. So don't get stuck in that what looks like, maybe it might be a continuation. Directly analyze those highs and lows to give you context of market structure, and then analyze your volume profile and see where it's showing support. What is the market structure, where it's showing support. Another thing I like to do is I like to take these session volume profiles and I'll say, once I realize that buyers are taking this over, probably right here or right here, and it starts moving up, I like to say that it's ideal to have your bullish entry somewhere on the bottom of this peak, right? If I'm trying to go long into the top of the peak, it's not as profitable, right? You're coming into that resistance level. And then if we're going down, I would like to have my entry somewhere above the half of the session volume profile. So if I'm trying to go long, it should be, kind of towards the bottom of the session volume profile. The closer to that critical support that we discussed earlier, the better, as long as it's proving through market structure that, more likely than not, the price is going to go that way. So that's one thing I wanted to show you guys from today's SPY session. If you guys have questions or you guys want to learn more about market structure and volume profile, I have a Discord that's completely free to get in for now. So go ahead and the link's in the bio. We'd love to see you guys there. For people that are in the Discord, I have a PDF volume profile book that I've written about all this stuff that kind of combines it with a bunch of market examples across a bunch of different instruments. So that is the link in the bio. I would love to see you guys in there. But for now, that's all I got. Happy trading. I'll see you guys out there.